Let's look at China. First, read this disclaimer carefully and do your good deed of the day by liking and subscribing. So, we have the stock markets here, and China is, of course, a country in what I have categorized as North Asia here, because I have like North Asia and then South Asia. Okay, 1% here from the 52-week low. It's gone through a minus 30-ish% pullback. So there's a lot of concerns in China at the moment, but that can also create opportunities, because as you can see, the Chinese stock market ETF, the FXI, it has pulled back to a very long-term support level. So you can see that here is horizontal support, here is horizontal support, you have here, you got some here, you got some here, you got here, you got, here, you got here, you got here, here. I mean, this is a very long-term horizontal level. Throughout the history of this market, and this is a lot of different scenarios, a lot of different events, good, bad, and so on and so forth, the bulls have a tendency to show up. Which begs the question, is the current setup, worse? Is it so bad that we're going to go further down? Because what is, the potential downside? So if we were to go down here, that would be an additional 13-ish% pullback. Obviously, that would be, bad. Down here would be minus 26%. And if we were to test the lows that we saw during the global financial crisis, that would be minus 49%. So yes, we do currently have a support level that is being tested. That leans me in a contrarian bullish direction. But I want to make it clear there is the potentiality for more downside, hence you do want to have some kind of protection here. Definitively. But yeah, I think that the current level is simply too interesting from a bullish perspective, and we have already seen a very substantial pullback. Because, it's all about, buying low and selling high. And it is when we are testing these kinds of resistances, which we have seen, fail back here in the past, that's where it makes sense to really become like aggressively bearish. At these levels, we have already seen, big gains here from the bears. So, yeah. I think I'm leaning a bit bullish, but it obviously is speculative. Here's the daily data points, and we see that horizontal support level. Many times it's been a pretty good time to buy. So here we have a bunch of indicators, and you see here that the weekly RSI that we are currently testing, yes, there have been times where we have been lower, but more often than not, we tend to see that these low RSIs form lows. Looking at the distance from the purple 20-week moving average here on the PPO, we have been further down in the past, but in a lot of times this has formed lows. The same with the distance from the 50-week moving average. And also here, the red 200-week moving average, many times it's been these levels has formed lows or been close to forming lows. Looking here at, the daily data points. It is interesting to see here that accumulation distribution has increased significantly during the sell-off. So there's definitively institutions buying this pullback. That's, a bit more contrarian and bullish. Looking at the distance from the 20, 50-day, 100-day, and the 200-day moving average, we have been lower in the past, but these current levels have a tendency to result in reversions to the upside. Okay, but let's explore further. So here's the seasonality. Over the last 5 years, there's been a sharp increase in strength from September to October, November, December. That is, of course, bullish. Over the last 10 years, October and November are substantially stronger than September. And this is, the 26th of September, so that is bullish. And over the last 18 years, the seasonality is very clear. Clear increase in strength. November is one of these strong, well, when you look at both how often we close higher and also the average performance, it is the strongest month. And there's very clear seasonality here for China. Here we have Finvis, we have some trend lines, nothing in particular happening. When we compare China with America, America represented with the SPY ETF. So the current pullback has pushed the price earnings for China down to 15, while America is at 22. So America is almost 50% above China, price earnings wise. Looking at the dividend, 2.14% here for China, 1.28% for America. So yes. So the big news event around China is the Evergrande situation, which it's obviously is a risk, but I think it's very important not to assume that history just repeats, because people are comparing it to the situation, the housing bubble we had in America. It is very important to just be aware that the Chinese authorities, they have a much bigger toolbox than what American authorities had. It's sort of like comparing a workshop with a Swiss army knife. There's a huge difference. Obviously, there are democratic issues when it comes to the power that Chinese authorities have in the situation here with Evergrande. Obviously, but if you sort of look at the positive side for investors, is that it means that they will be able to contain contagion very aggressively, like really aggressively, and that reduces substantially the risk that this is going to become this massive disastrous event. And if we look at the history of bear markets, they usually are different. It's that's the tricky thing about bear markets. They come from those places where we do not look that carefully, and the real estate market in China has been talked about for a long time. So throughout all of the data points we have here, there's been so much talk about the property bubble in China, and because of that, a lot of contingencies have been put in place. So yeah, I think there's been a lot of hedging and things happening behind the scenes here. Okay, so the super bullish way to trade this would be through the YINN ETF. Gives you 3 times bullish exposure, and here you can see some of the prior gains during big rallies. So it's a very interesting, though certainly speculative bullish trade.